people are beginning to become aware, we're in a sovereign debt crisis. I've described that. People are beginning to become aware of what that is. With both gold and Bitcoin, I've had friends say, well, I can't buy it now. You bought it at $1,000 an ounce, or you bought Bitcoin at $15,000 a coin. Flip that on its head for a moment. Let's just say that the fiat monetary system is the Titanic. And the gold and Bitcoin are seats in a lifeboat. I paid $1,000 and $15,000, and you got to pay $3,300 and $85,000. But do you want the seat or don't you?
What if gold at $2,500 is still cheap? And what if Bitcoin is your last chance at a seat on the lifeboat? In today's episode, legendary investor Larry Lepard sounds the alarm. We're living through a sovereign debt crisis most people still don't see coming. Gold is breaking out. Bitcoin's up 2,000% in bond terms since 2020. Meanwhile, fiat currencies? They're quietly failing. Larry explains why this isn't just another bull market. It's a complete breakdown of trust in the system. And if the Fed, the Treasury, and Congress do what they always do, print to survive, we could be headed towards something even worse: hyperinflation. So what happens next? Larry says you don't need to time it perfectly. You just need to own the scarce assets before the panic starts. Gold, Bitcoin, lifeboats. Stick around. This might be the most important conversation you'll hear all year. And if you find value in this, hit subscribe. You're going to want to hear the next one.
I mean, most people don't, and I think most people have been very blissfully unaware of this problem. But I don't think that's going to last. I think that, as you've noticed, and I've noticed, gold is relentlessly pushing to higher highs. It's up 60% in a little over a year now. I just wrote my quarterly report, which will be out on Twitter later today. The only other time that's happened was 1979, when it was up 125%. And that was really a dollar crisis. I remember my grandfather thinking the dollar was going to fail. And that's when Volcker came in and put interest rates up to 20%. And he was able to do that, but he was, partly able to do that because the debt at the time, U.S. government debt, was only 25% of GDP. And right now it's 125% on balance sheet, and larger if you consider all the the off-balance sheet obligations of Medicare and Social Security. So it's quite a mess. And sadly, it's quite a mess. And a lot of people, I think, people I talk to are like, well, gold's in a bubble. And even the gold mining analysts were saying, well, gold's at 2,500. Well, yeah, it's at 2,500 now, but it's going back to 2,000. Well, it was interesting to me, just recently, we've started to see major investment banks realizing that, oh no, this is something different. We are actually in a changing monetary environment. And Goldman Sachs came out and said, it's a possibility that gold's going to go to 4,500. I was kind of shocked. I think if you pinged Goldman a year ago or a year and a half ago, they'd have said, oh yeah, it's at 2,300. It's going back to 2,000. So I think what's going on, Mark, is people are beginning to become aware. We're in a sovereign debt crisis. I've described that. People are beginning to become aware of what that is. And then the implications of that are that, you can't pay too much for gold. With both gold and Bitcoin, I've had friends say, well, I can't buy it now. You bought it at $1,000 an ounce, or you bought Bitcoin at $15,000 a coin. And I say, well, flip that on its head for a moment. Let's just say that the fiat monetary system is the Titanic, and the gold and Bitcoin are seats in a lifeboat, which you really want if you were on the Titanic. And so I paid $1,000 and $15,000, and you got to pay $3,300 and $85,000. But do you want the seat or don't you? Because the alternative doesn't look great. I mean, I may be overstating it there, because it's not certain this monetary system is going to fail. But what I do have a high level of confidence in is that the monetary system is in trouble, and that there's almost no way out that's not inflationary. I mean, there is a way out, which would be to just have a complete collapse. But I think that the powers that be will never allow the system to collapse. When pushed against the wall, they always print the money, and they always will.
Is the main overriding reason you like Bitcoin because there's a finite amount, 21 million will only ever be produced, and that's by 2140, I guess it is.
That's correct. You've got it right, Mark. I mean, the fact of the matter is that Bitcoin, in my opinion, and a lot of people disagree with me on this, a lot of gold people disagree, and I respect their disagreement because there are concerns and there are risks, but Bitcoin to me is a form of digital gold, because what the algorithm that Bitcoin represents did is they created immutable digital scarcity. Everything digital, like a music file, a video file, a computer file, can be copied infinite number of times. But here we've got a ledger that they created that's proven for 16 years and 890,000 transactions to not be hackable. And to me, that's enough proof that these 21 million coins in the Bitcoin network are scarce. They're legitimate digital scarcity. And ultimately, even gold gets diluted, not fast. I mean, it's only 1.7% a year added to the existing supply, but, there will only ever be 21 million Bitcoin. And, the use cases for it are growing, and the ease of verifying it and moving it around, are pretty high, particularly when you compare it to gold. I mean, we don't even know if Fort Knox has all the gold they say they have. We don't know how much the Chinese have. I mean, gold is tougher to transact in. It's analog sound money, and it's been around for 5,000 years. It'll always be the first form of money. But I would submit to you that in today's world, we're moving into a digital world. And, the people who invented Bitcoin, we don't know who they are. I have a suspicion who they are, but the people who invented Bitcoin created immutable digital scarcity. They invented it. The only risk to me in Bitcoin is that the technology fails. And I think the odds of that happening were much greater in the early years, before all the patches and the things, the hard forks and the block wars and all the things that occurred. And now we've really kind of settled down to just a stable network that every 10 minutes puts out another set of transactions. And so it's my belief that more and more people are going to come to see that this is a decent form of money, that it's a substitute for money. And money has always just been a ledger, just keeping score. I mean, you don't really have the dollars you have in a bank. You just have a computer entry at the bank. So, and that's even before gold existed. Money was a ledger. In caves, people put marks on walls, or there were Sumerian tablets where people were writing down amounts, and there wasn't even a currency per se. They were just, this is X amount of wheat, and that's how they kept track. So money's a ledger. Bitcoin is a digital, immutable digital ledger, and it's scarce, and the demand for it's going up. I mean, we can see that, and therefore I think I'm hard pressed to see what's going to change that, Mark. I mean, if somebody came to me and said, well, suddenly everyone's going to lose interest and not want to buy this thing, explain why. I mean, if that became true, yeah, then, I mean, it's only money, because we all agree that it has value and it will grow in value. But, the number of people who have that opinion is growing every year. And that's why it continues to make higher highs and higher lows. I should add, I really think it's important that Bitcoin and gold are really sending a very strong signal that fiat currencies are failing. I mean, it's the sovereign debt crisis is real. And this is in my book, and it's actually, it's in my quarterly report as well. I mean, since 2020, Bitcoin is up 2,000% in sovereign bond terms, and gold is up 200% in sovereign bond terms. And sovereign bonds, the U.S. Treasury bond, used to be the base layer of the financial system, and they're failing. They're really failing. And so I think that, the book talks about this. I'm trying to help people, the people who, in light of what's going on in the macro world with this sovereign debt crisis, people who are not in, sound money alternatives, gold, silver, Bitcoin, are going to suffer, compared to everybody else. And it's been a long time coming. I mean, I've been a gold bull for a long time. It's been a brutal trade. And the book talks about that. But I actually think we're about to get paid in a very big way, perhaps more than we ever anticipated. And it feels to me like that's coming right now.
You said, Larry, that in the next decade or so, hard assets are the place to be. And as part of that, even though it's not hard technically, you think Bitcoin can go up by 10x. Let's call it $850,000 in 10 years' time. Is there a math behind that?
There actually is. Yeah. And I encourage people to get the book and read it. There's a chapter in there where there's a piece of work done by some guys, done by a really smart guy at Stanford PhD. They looked at the Bitcoin price back to inception, and they mapped it on a log basis, a log of time and a log of price. And they created kind of, quote unquote, a power law model based on these two log lookbacks of the price. And what they found is that the data fit the model 97% of the time. That means an R squared of 97% of the time. So anyone who's worked with data modeling knows that kind of an R squared, that means that model is actually predictive. Okay, it's not just some random, the model says it's going up, therefore it's going up. It's like if back testing it shows you 97% correlation, well, then it's not crazy to think that on a go forward basis it will follow that same model, and I believe it will. And that's the model that, and it's 5 to 10 years out, but that's the model that predicts these much higher prices. And there's actually a part of the book has a nice part on it that explains it, and then it shows you to where you can go to see an update on the model in real time. So yes, I mean, I'm not just pulling numbers out of my butt. I mean, there's actually a model based on what it's done that suggests that this is what it'll continue to do. The one thing we don't really know, Mark, the one piece that's missing from both that model and the gold and silver price is we just don't know how bad and how irresponsible the government will be. I mean, there could come a time when, the dollar just totally fails. I mean, there's those people who say, well, maybe gold will go to $100,000 an ounce. Well, fine, and perhaps gasoline will cost $1,000 a gallon. I mean, it's at some point in time here, you kind of get into, well, these prices all get kind of nutty just because if we print the money so aggressively, the money will trend toward worthlessness. Do you know what I mean? And then we'll have to find some new form of money, which historically is what's always happened after you have a hyperinflation. Hyperinflation is terrible, and I'm not predicting it's going to happen, but it's not a zero probability. And if it does happen, we're going to have to do a reset to a sound money standard. And really, your only choice is gold to start with, and then as time develops, I think it gets more broadly accepted, Bitcoin is a choice as well.